let's put this all into perspective now. Our business editor, Christoph Kober, joins us. So, Christoph, we heard that investors are concerned about slowing growth in China. But isn't that a good thing? Because wasn't the Chinese government trying to promote slowing growth to make it a little bit more manageable, that the growth was maybe overheated there?
That's right. Slower growth isn't necessarily a bad thing. Slower growth could be more sustainable, more healthy. Yet what has investors worried here is that many companies invested in that strong growth that we have been seeing in China in the last years. And now this deceleration of the Chinese economy takes the pace of this deceleration takes many investors by surprise, and also amid that, the Chinese government is still putting out official data saying the Chinese economy will grow at a rate of about 7% this year, and this is hardly believable. So there's all these worries and these unanswered questions, and we've seen the devaluation of the Chinese currency recently 3 times in 3 consecutive days, and this is really what had investors worried.
Yeah, investors, they don't like all of that uncertainty. In fact, there's nothing that they hate more.
That's right.
When we look at how stocks have reacted in the past couple of days, it has been so dramatic. I mean, if we're looking at the figures here, this looks kind of like the beginning of the financial crisis in terms of how dramatic it is. Is it that bad this time?
It could be, but it doesn't have to be. I mean, if we look at stock markets in the recent years, they have gone up almost, all the time, very steadily. We've seen one record high after another as central banks have pumped enormous sums into these markets. So a correction, meaning a drop of share prices, that was expected. Now, what has investors taken by surprise is the sharpness of this fall. And so this is what has taken them really by surprise.
So what happens tomorrow? Are we recovering from the hangover, or is the binging continuing?
That is a good question, and that's what our markets reporter Jose Luis de Aro in New York has been asking investors. Here is his wrap-up of the trading day in New York.
Wall Street suffered its own meltdown on Monday, where the Dow Jones recorded its biggest intraday loss in history, erasing 1,089 points. Uncertainty coming from China spiked volatility to multi-year highs and erased more than 77 points for the S&P 500 by the end of the trading day. That said, main indexes recovered part of these losses after some experts pointed out that Beijing still has some policy instruments, like, for example, another interest rate cut or more devaluation coming for the yuan, around 5 to 10% over the next 12 months, as measures to prevent the probability of a hard landing of its economy. Also, some traders on the floor consider that this correction was necessary after a bullish 6-year ride for U.S. equity markets. But the main question right now is if the Fed will raise interest rates next month, as for now, only 23% of the market considers that this will happen in September's meeting.